It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat, our lead market technician, here to take us through the charts. And here to take us through the trades today is Dan Deming, the managing partner at KKM Financial. Great to have you both with us, as always. Dan, love to get your thoughts on this market action we're seeing so far this week, particularly today, with a pretty negative response, despite the fact that we got this government shutdown end.
Exactly. Yeah, it's buy the rumor, sell the news type of scenario today, as we do see the government reopening, and yet the market is coming under some pretty significant selling pressure. It's interesting that this rotation is something that we keep a very close eye on, and that's what we continue to see unfold. And again, that's really why I chose these 3 stocks today. These are kind of the ports during a storm type of scenario when I look at these trade examples today. And, I think that rotation is something that's going to continue as we see some of these high flyers coming off their perch as we move out of 2025 into 2026. Yet you still see certain parts of the market, particularly healthcare, industrial names, finding some renewed strength and maintaining upward momentum, in some cases going to near all-time highs. So again, the diversion here as far as just some of the aspects in the market coming out of the government shutdown, also anticipation for what the Fed might be doing in December. And you're seeing, again, valuations now starting to be called into question as this AI trade continues to evolve. And now the questions are, is the money actually there?
All right, and I noticed that you don't have any AI names in your big 3 today. So let's talk about your first one. I know they're in healthcare, but I'm not as familiar with this company. Thermo Fisher Scientific. Walk us through this pick, Dan.
Yeah, a diagnostic research company, and kind of, again, a name that doesn't get the attention it probably deserves. But when you look at the price action here, as healthcare continues to show strength here as we close out the year, this is one that's come off its lows and continue to maintain upward momentum. So, again, I'm looking at this stock to continue to maintain its upward price action, and today's trade example is buying the stock and then writing a call in January above the stock to have the opportunity, if we do see a nice run into early January, to have the option to maybe get taken out of the position and capture upside.
All right, so Rick, as we look at the technicals, I'm looking at the chart here, up 38% in the last 6 months. What are the technicals showing us here on the chart?
Kind of refreshing to be talking about companies that are a little more concrete than some of these more nebulous AI type names here. But when we do look at this one, it's been a sharp rally to the upside. We can see that we had several phases in this chart once we had this earnings event here that propelled price upward after the initial surge. Oftentimes you see there will be pullbacks to sources of prior support. In this case, they were getting increasingly small on the climb up here. So these types of bull flag, bull pennant price behavior are things many traders look for. But now we have seen a push to the upside. We are pushing beyond the boundaries of our rising wedge type shape here. The bulls likely would have their sights set all the way back here near 607. Our best close on this chart, not the intraday highs of 610.97, but our best close was 606.74. So one mark to consider to the upside there. If we were to look at our moving averages here, our 21-day exponential moving average lines up with this volume node that you'll see in a minute here around 564. You can see as well our 63-day lines up with the second volume node near about 526 or so. RSI and continuing to move higher. We can see it is in the overbought area, not quite making a new relative high just yet. That would be a crucial thing to be on the lookout for as we head into the close. Now that we do overlay our volume profile study, you can see that we have these important areas of potential congestion where there was heavy volume activity. Those come in right around 525 and 565 or so respectively. Our +2 standard deviation channel could be supportive as well, near about 587.
All right, and right now we're trading at 593 for right now. So as we take a look at your trade, what levels specifically are you focusing on?
Well, Rick pointed it out. Honestly, the highs that we did see early in the year around that 607 level. So that's why I'm looking at buy writing this name in the trade example. So buying the stock and selling a 610 call. You can do that, I believe, here around 1550 in the stock, and gives you the ability to capture further upside, lowers the break even if we do see a little weakness, but overall a nice capture zone to the upside if the stock is able to maintain the momentum and challenge those highs as we roll into January around that 607 to 610 level.
All right, your next one, also a diagnostics company here. We're talking about Danaher. They're making a move to the upside today, up 2.75% right now.
Yep.
Walk us through this pick.
Yeah, bucking the trend. I mean, again, most of these names today are continuing to show strength into weakness, and that's another factor contributing to why I chose these names today to highlight. And similar, healthcare, a name that got dragged down with all the healthcare stocks in the middle of the summer, probably unduly so based on the price action since we've come out of that. And again, maintaining upward momentum. So again, I think there's a possibility here to capture further upside as we continue to see it moving higher and putting in higher highs here in this pattern. And again, this one, trade examples today, is a defined risk. So it's a call spread to capture upside, but also have defined risk definition. If we do see the market continue show weakness and some of these names falter because of the overall weight of the selling pressure that could potentially set up for further downside.
All right, well, basically, looking at their price action in the last month, up almost 10%. So, are the technicals showing us that, we could be set up for some pullback, or does it look like healthcare is going to continue being a strong sector here?
This particular chart seems to be breaking out to the upside here. What I mean by that is, by one measure, you could see that we have our downward sloping trend line here, our sharper blue trend line. That's been broken a few sessions ago. But today, we're making new relative highs above a previous peak here. Notice as well, if we were to backtrack, 222.37, that was the low point before we had this small gap down as well. So we've filled the gap. We seem to be moving on beyond that point. Actually, the gap was filled earlier, though, and we had our highs near another gap, 235. So you can see these are some reasons why we go out of our way to keep track of these gap levels, because they can often come back into focus down the road here. So we're breaking above the first resistance. The second resistance still remains above our current prices at another gap level. So if we were to look at some of our other studies here, you can see that we have a confluence of two of our moving averages, 21 and 252-day EMAs, that line up fairly closely with our longer-term white trend line that we could draw there, connecting just two lows. Not really the strongest trend line just yet, but just showing increasingly higher lows. RSI not quite making much progress beyond those old highs, but still coming quite close to that overbought area. A re-entry into the overbought area as prices breaking out would be viewed more as a confirmatory sign of a breakout here that has some legs. So volume profile, point of control, our heavy trading area lines up very closely with those indicators that I just mentioned here. So that area around 210 really stands out as potential support. Another node to the upside around 225, 230. That's also where our +2 standard deviation channel comes in. A break above this level could then result in testing 235.
All right, Dan, so as you're looking to trade this, what levels specifically are you focusing on, and how long is this trade?
Yeah, again, this is a shorter dated trade into December. So again, just looking out over the next expiration and a half cycle, basically, and a couple, 6 weeks out. So again, capturing the zone that Rick highlighted. I mean, look, I'm looking at the chart the exact same way. To me, it looks like you got a series of higher lows and now higher highs. If we break above 225, that was my key level, and it looks like we're there right now as we continue to see upside momentum today. So the trade example is a December call spread, buying the 220, 240 call spread to capture that level back up to that 235, 237 level if we see continued momentum to the upside, particularly as it does appear that we are breaking out and making a new high off a series of higher lows. So taking the charts into concept and expecting that if we continue to see this momentum that we could see a push back into that 235 to 240 level.
All right, right now trading at about 225, just a little bit north of 225 for Danaher. Your last pick, a little bit of a pivot. We're moving away from healthcare and into oil and gas here. So let's talk about Valero Energy.
Yeah, again, a company, oil, gas refining, and also renewable energy as well. So a stock that, when you see what's going on in the price action in energy, now natural gas has had a nice move, but you look at WTI and such, most of the energy stocks have struggled, but Valero continues to maintain upward momentum through all this. Again, they're in the refining business, so they're looking for demand, and that demand continues to pick up. And I think that this stock continues to show signs of, again, counter action to the overall market right now, and the potential for further upside as we continue to see this momentum kick in.
All right, Rick, so do we have potential for further upside knowing we're already up 48% year to date?
Well, like our last chart, we can see that we've broken out above an important area. These old highs that we saw here, our high close came in at 175.63. That's about where we got stuck once more. But after a short pullback, that did not actually fill the gap that formed here, we have started to push our way to the upside once more. It seems like for now we're hanging on above that supportive level here. Our old resistance near 175 now becomes the support point to watch out for. Our highs came in just shy of 183, 182.99 to be exact. Today's candle looks like it could be forming a harami type of candle pattern here, where our small green candle, the real body, the distance between the opening to the close, completely contained within the previous day's larger red candle, a sign of slowing momentum, of a stall in trend here, potential indecision here. So those boundaries would be extra important to keep an eye on to see if we do get some kind of potential breakout start to take shape. To the downside, if we were to move below 175, the 21-day EMA comes in just below 172, so that would be a potential supportive area. Our 63-day EMA coming fairly close to some of these other high points that we established, as well as this gap level near about 162, 163, that general area. RSI still trending upward, still enjoying a series of higher lows as well in tandem with price. So now if we were to look at our volume nodes, volume is heaviest near current prices right around here near 172. There's another node just below that lines up closer to the 63 EMA near about 163 coincidentally there. But to the upside, our +2 channel, 192.46 would be ultimately one upside area to watch out for. Remember, it's just a snapshot of this moment in time though.
All right, so Rick just highlighted 172 several times and then 192 to the upside. Dan, do either of those numbers play into your trade?
They do. They actually do. I mean, I love it when Rick analyzes this and we're on the same page, and often we are. So, yeah, today's trade example is a risk reversal and highlighting those levels as well. Selling the 170 put and buying the 190 call in January, giving a couple months for this trade to develop, give it a range or a buffer zone. If we do see some weakness back down to that 172 or below 170 level, you can put this trade on for a slight credit, about 75 cents here right now. So again, lowers the break even just below 170, but it gives you the capture zone to the upside. If we continue to see further momentum to the upside and we do see a break of the recent highs, this would capture the move above 190 as we move through these next 2 months. So again, playing for those zones where you have some support, but also having the ability to capture further upside should we see continued strength.
Dan, we appreciate you being with us for Big Three. For your picks today, that's Dan Deming, KKM Financial, and of course, Rick Ducat, our lead market technician here on Schwab Network.